Hello everyone, Tomo from Market Zone here with a new weekly market analysis video in which I'm going to cover what has happened in the financial markets since I posted the weekly market analysis newsletter this Monday. Also, we're going to look at the technical status of several underlines towards the US jobs data that will be published tomorrow and on Friday, so stay tuned. Here we go. Hey guys, what's up? Tomo from Market Zone here. First of all, I want to thank you guys for coming back to my channel and thank you for watching this video. I really appreciate it. If you aren't subscribed to my channel, don't forget to subscribe at the end of this video, activate notifications so you won't miss the next one. What I'm going to do in this video is what I usually do. I'm going to cover the underlines that I mentioned in the weekly newsletter this week. We're going to see what has changed and what are the trading scenarios that I think that you should monitor and follow in the coming days. We are going to start with EURUSD that pretty much has done what I expected it to do and what I wrote about in the newsletter. I mentioned that EURUSD broke below a minor uptrend line, and I think that EURUSD will continue lower to test this support zone between 1.175 and 1.18. Now, as you can see, EURUSD has reached the support zone. It is now testing the top of the support zone that starts with the fast MA line, that's the 18 SMA line, the yellow line that you see here, and ends near 1.175, which is the 50 days MA line and also a structure zone that we have here, as you can see. So we are entering a potential support zone, and it will be interesting to see how EURUSD will react to the support zone in the coming days. We have US jobs data that will impact EURUSD, and we have a speech from Draghi this Thursday. Now from here we have two options. The first option, of course, is that the support zone will hold as support and will push EURUSD back up towards 1.2 to complete a bearish cipher pattern and also retest the PRZ of a bigger pattern and the structure zone that you see here, a resistance zone that I mentioned in the weekly newsletter this week. So this is the bullish scenario, the short-term bullish scenario for EURUSD that will be relevant if the US data will be below expectations, or if Draghi will boost the euro this Thursday when he will speak. The second option will be relevant if the bearish momentum in EURUSD will continue and we will see a breakdown and a close below 1.175. That means that EURUSD has the potential to continue lower to test a weekly support zone 1.15, also a level that I mentioned in the newsletter, and also will come closer to the 200 days MA line that can provide support if the price will retest it. From the two trading scenarios that I've described, you can understand that the key price zone, the one that you should focus on this week, is between 1.175 and 1.18. This is your key price zone. This is where you should look for bullish reversal patterns if you want to trade euro to the upside, and this is where you want to look for further weakness signs and breakdown signs if you want to trade the downside. Now obviously we see the exact same scenario, only to the opposite direction in DXY. This is a dollar index chart because EURUSD is pretty much a mirror image of DXY. Here we see that DXY has reached the resistance zone that I mentioned in the newsletter between the two MA lines, just like we saw in EURUSD. This is a potential resistance zone that can generate two moves. One, downside move towards the completion of a cipher pattern near 92, and the other one, a bullish scenario, a breakout scenario, if DXY will close above 93.8, 94, it will continue towards the trend line that we see right here. Okay, it can move towards the trend line, towards the 200 MA line. So the exact same scenario, only to the opposite direction. Jumping briefly to equities, this is the SPX 500 daily chart, this is the S&P, and what we see here is that SPX continues to float at all-time record highs above resistance right now, but being as stretched as it is, it struggles to continue higher. Basically what we are seeing here is that SPX desperately needs another boost. If the price will close back inside the broadening top pattern that I mentioned, it will be a short-term bearish signal, a false break signal for SPX. Now the nearest supporting element for the S&P is that yellow line that you see right here, the fast MA line that has been providing support for the S&P since September. So when I'm talking about a warning signal that may be generated if the S&P will close back inside a broadening top pattern, I'm not talking about a major turn in the markets. I'm just talking about a potential short-term pullback, or maybe a sign that you need to be aware of. Those of you who want to buy the dip can use the fast MA line and the 50 MA lines between 2600 and 2620 as a buy the dip opportunity, and maybe go long the S&P or go long stocks from that support zone. So this is what we have for the S&P. It needs a boost. It can get a boost from the jobs data. It can get a boost from Draghi. It can get a boost from everywhere, because we know that the sentiment is still bullish and strong. So basically when we talk about equities, we can say that the S&P is definitely strong. It is steady. It maybe lacks some momentum right now, but it is floating at all-time highs, so we can consider it as a sign of weakness. Financial sector is strong. I mentioned it in the newsletter this week. And even the Nasdaq, that was suffering from short-term sell-off in the last couple of days, is recovering today. But no matter how strong the S&P looks right now, and no matter how bullish you may be on equities, I want you also to pay close attention to the VIX, because no doubt we have a spike in volatility in recent weeks. As you can see from this chart, despite the green opening that we got this Monday when the markets reacted to the positive news from the weekend about the tax reform approval in the Senate, we didn't see the VIX crashing down to below 10 levels as we got used to see in previous times that the market reacted to positive news. In fact, instead of being squeezed down to all-time record lows as we got used to see pretty much since May, what we are seeing here is that the VIX is being pushed up again and again from 10 to above 11, and that can be a warning signal, a short-term warning signal that you need to pay attention to, especially if you're holding stocks, equities with profit. So that's about equities. That's it for this weekly market analysis video, but before we say goodbye, I just want to turn your attention to the fact that EURUSD, the bearish trading scenario that I described in this week's newsletter, has reached its first target zone, the fast MA line, that's the support line. Generated about 100 pips profit for those of you who chose to trade it, and that's a nice profit that you got just from reading my free weekly newsletter. So don't forget to subscribe. If you aren't subscribed to the weekly market analysis, you can do it by visiting www.themarketzone.net. Go to the weekly market analysis tab and subscribe there for free. See you in the next video. Thank you very much for watching. Bye.